Good evening and welcome to another ACY Securities webinar. For those of you who might be new tonight, my name is Alastair Schultz and I'm the Chief Market Analyst for ACY Securities. My career has expanded over a number of years. I'm about 15-year veteran of the market so far, and I made my start sort of on Wall Street. So I have worked my way through a variety of different funds, brokers, and I've even written a book about some of my experiences. So I am moving into sort of a section that will be for tonight about what we're going to be looking at in general market action. And we're going to do a bit of everything tonight. I'm going to try and put forward a bit of a talk about mean reversion strategies. We're also going to have a look at perhaps a couple of the markets and see which ones might have some action presenting on tonight, and talk a little bit about the news that's happened so far. So we will have a look at a few different things, but to get started, I do have to do a bit of a risk disclosure warning. I'm not expecting tonight to be all that busy, purely because we've got a lot of news happening tomorrow and on Thursday with US presidential election-based stuff. So that will be probably dominating the news and the media tomorrow, meaning that we will be hearing from a lot of other entities a bit later on in the week. So, we've had a bit of news get out of the way today, this morning, but I'm expecting to see a little bit more later on. Now, what we've got here on the charts right this very second, or in front of us right now in the second, is that risk disclosure warning I was talking about. This statement effectively says that, and it is wholly available on our website as well, if you would like to get a copy for yourself in its full form. But this statement basically says that trading derivatives of any kind, foreign exchange, CFDs, all of them carry a high level of risk, particularly when you are using leverage. So it's important to understand your own backgrounds of your investment objectives, your risk tolerance, your trading experience, and it is certainly possible to lose more than your initial investment. So keep an eye on how you're doing it, and if any of these sound like there are questions that need to be asked, then you should probably seek some help. I'm quite happy to direct you in the right place. And of course, almost all of the information tonight is really from a generalized perspective. I'm looking at it from my own perspective, because I don't know any of your guys' financial positions, and I wouldn't get involved in that sort of thing at this point in time anyway. Now, I am just going to put a chart up on the screen just as a bit of a placeholder for us right this very second. When I actually find track of my mouse, there it is. Now, I'm going to leave this chart there, but before we get started, we are going to have a little bit of a look at the news. Now, you can see what I mean. Tonight here, we don't have a whole heap of information. We've got a bit for the Euro side of things. The German zoo economic sentiment, which is this report here at about 8 p.m. Australian Eastern Standard Time, is probably somewhat relevant or important to have a look at. And we will be considering whether the German economy is improving or worsening. This report here basically looks at the idea of sentiment and how people are feeling about business, their current conditions, their household expenditure over the next 3 to 6 months or so. Now, outside of that, we're also going to be having a look at some of the other news events that might be going on throughout the day. We have manufacturing sales from Canada and wholesale prices index coming along as well. Both of those are relevant to a certain degree, but as you can see, we've got low impact events all throughout the day ahead. So I am not going to be focusing too much on those. But when we actually have a look at what goes on Thursday, we have a lot of red or high impact events going on. And there's a couple of reasons for this. During the day tomorrow, or at least evening session or evening time in the US, we'll likely be hearing from, or at least be watching, the inauguration of Joe Biden to become president. So all of that together is going to give a couple of different things happening. We're going to be then hearing probably from Janet Yellen. We've got no scheduled release time as of our economic calendars just yet, so I am keeping a very close eye on when that may happen. And that's going to be important for the US dollar. We already have a bit of an understanding that she's going to be backing this $1.9 trillion stimulus bill that is trying to be pushed through by Joe Biden. I'm expecting him to get a little bit of pushback on that, and there'll probably be a very different figure by the time we get an end result. But regardless, we are going to be seeing quite a few people looking to get some advantage on that situation. We've also got earnings season that's running at the moment. So today we heard from Netflix, Bank of America, Goldman Sachs, State Street, And I believe there was a couple of others in there as well. Interactive Traders, I think, was one as well. So, we do have a little bit happening on the stock market, but with yesterday's closure with Martin Luther King Day, it's been a little bit quieter today. So you can see here that when we hit Thursday, we do have a lot of stuff going on. We've got Australian unemployment, monetary policy statements coming from 3 different central banks, and there'll be another 2, I believe, on Friday happening. So it is going to be a busier week towards the end of the week. So bear that in mind when you are thinking about what you might be looking at in your charts. For tonight's trading action, the ones that I'm really, if I'm going to stay up and keep trading, I'm going to be keeping an eye on what happens with this German zoo economic sentiment, which is going to be shortly after we finish our session tonight. And that's obviously going to affect the euro dollar. So we might have a look at the euro dollar tonight. But of course, if anyone does have a preference, if you have a chart that you guys are thinking about, or you have anything that you might be considering, then please feel free to let me know. You can do so through your Zoom webinar chat function, which if you go to the top of your screen or your Zoom meeting notes and you click on the more option, which is like 3 dots with more written underneath it, you'll see chat. You'll also be able to, on a Windows computer, hit the Alt button and H to bring that up. For those of you who might be watching through YouTube, I'm quite happy to answer your questions, but I prefer you make it as a comment because I might not be able to actually see it whilst I'm doing this presentation. I just simply don't have enough screens at the moment to be able to do that. So I would prefer them all to be done through the Zoom chat if you can. Now, moving on from that, the only other piece that always catches my attention when it comes to news is this one here, the New Zealand GDT price index. And there's a couple of reasons for this. The first reason is that when we think about the New Zealand economy as a whole, we don't generally think of milk prices as being all that important. And that's exactly what GDT is. It's a global dairy trade pricing. So I'm just going to put up a New Zealand dollar chart for us to have a little bit of a look at and see if it's already being priced in. We'll move this up to a daily, get a bit of a better look. Now, when I look at the German dairy trade sort of things, the reason it is so important for them is because it is one of their major exports. And I'm already under the suspicion that we will be seeing them having a bit of a tough year, mostly because people aren't exporting anywhere near as much as they need to. We aren't able to get products in and out of countries. Some countries aren't allowing the products to come in. And one of the key things is that when it comes to dairy trade, New Zealand's GDP relies on 14% of GDP out of New Zealand relies on dairy products at certain variable intervals. So in a large degree, you can almost say that some parts of the New Zealand economy actually really rely on the function of their ability to sell milk. So if they haven't, pardon me, if they haven't been able to actually bridge that gap or find a solution to that problem, then you're likely going to see their GDP also take a little bit of a hit. So the previous pricing for it was about, previous index suggested about a 3.9% rating. The forecast right now is sitting a little bit average. We haven't got a full figure just yet. I am trying to see if I can find it from somewhere else where it might be a little bit expanded, but the previous was 1.3%. It's jumped to 3.9%. So that's a pretty big jump, particularly if we look at the weekly recurring pricing that we may have seen, which I'm just going to put it on the chart. It might be a bit easier just to show you guys what I'm looking at. Now, here we've got what's going on. Oh, it's not changed screen. Where'd it go? There it is. So this is the history of our last lot of pricing that we saw on them. The previous was 1.3%, and the actual for the June 6th was 3.9%. So we're seeing a pretty consistent run of, these are all these prices just down here. There's no difference on these ones there. Now, that's a pretty big jump. A jump from 1.3 to 3.9%. That's relatively big. So it's going to be quite, and we've seen it happen once before here at the very early onset of December at 4.3%. In both of those instances, it's pretty hard to get back-to-back results that would say, both of them are going to be outstanding, because the 4.3 and the 3.9 are outstanding in my view. Now, if we were to just put it as a bit of a graph, have a little bit more of a play, you can see here that for the majority of the last few years, it's actually been on the south side after we have a big run. Every single time we get a big bump, we get a short move after it pretty much, or at least a move down. So it's one of those things that where they get, they might have a month where they get really, really good expenditure and getting it offshore, and then it will slow down for them again. So, we're kind of in the middle of that cycle now. You can see we've got the run down going down like so, and we're likely to see this track down on this side, and then it'll tick back up. So each time we kind of get the counter opposite effect of what's happening. So when I look at the GDT price index when it's coming out tonight, depending on what that figure really says, I'm going to be looking at this situation from one of two ways. And I'm probably leaning towards a more short side move than a long side, just knowing where it's been on that previous graph that I showed you. And if we actually look at this on a daily chart, which is where we've got the New Zealand dollar playing off right now, you can see this sort of shape up here. Now, this is, it's not a pattern. It's it does have some signatures of a reversal pattern, but it's certainly not the ideal one. Ideally, we'd be wanting to see this operating like a bit of a head and shoulders pattern, first shoulder, head, second shoulder, but this side is higher than this side. And, that's not necessarily optimal. I mean, it's right on the money there for really on both sides. So I suppose from a technical perspective, if you really wanted to call it that, it would, but I would prefer to see closed bars above, sort of this red candle here, the tallest one there that's on that run. But we haven't in this instance. So, it doesn't mean I won't take a trade off it, but I certainly would be still considering it. And right now where it's sitting on a daily chart is not a bad placement. That automatically just moved there. That's not where I wanted it to be. Sometimes they do that on these charts. So hopefully that is, that would be what we would consider the neckline if we were going to be doing it that way. This would be our top side, probably our first stop loss at this point, and then we're going to be aiming to try and get about that much profit out. We want to try and go from, the existing low to the next low, and then see if we can bounce our way back up this way, because we've been in a long-term trend, haven't we? Regardless of where we sort of I changed charts there. Hang on, where did we put that New Zealand dollar one? That's disappeared. I seem to have deleted it. We'll bring that back. There we go. Now, if we're really thinking about it, that this is a long-term uptrend that we've got going on, so you want to sort of stay with the trend. Trend is your friend. All of those are quite valid. We've also had significant support and resistance all the way up here. You can see sideways price actions, and price sort of sitting in that range. Again, we've hit an area where we could be suspicious of it turning into this sort of pattern that's going on here, where it's just sideways sort of price action going up and down in a range. So for me, looking at what's going on in the daily, I am skeptical of it being able to sort of get down here, though I am prepared to see it happen at the same time. So really, when we look at this, there are sort of three outcomes to consider. If we were to see GDT prices and the index, have a fall, then you would anticipate that the New Zealand dollar would fall. My first inkling would be that I would end up seeing prices reach about this point here. I would want to see them hit about this point, and then potentially look for an area of opportunity to go back long again. Of course, I would probably be comfortable taking a short position now, holding a stop loss at about here, and aiming for a run back down this way. Then once that's happened, I'm going to be sort of putting a little bit of a box on it, because now we would have one high and a second and one low. That's kind of a little bit more useful to us. But even now, we can probably draw a little bit of an estimation. So, I'm sort of thinking that this sort of is going to be the range over the next couple of weeks. If it breaks outside this box, then it breaks out. And I'm going to be looking for different opportunities and waiting to reevaluate what I think the next thing is going to be that's going to happen. Now, it's important to note that, if you do miss a trade, don't worry about it. It happens. You don't need every single opportunity. It's about finding the right opportunities that are actually going to work for us and make us some money. You can take 100 losing trades and make one winner, and it will end up being that one position that takes you in the right direction. So the fear of loss is something that really does get under a lot of people's skins. I'm quite happy taking a number of losses, provided I am killing them off early and recognizing that they aren't the right positions to take. So the first sort of instance, I'm thinking this box. I'm thinking that we're going to possibly see some bouncing in and around this area. We might even get a break out of this box and a breakthrough of this line, but it's likely to be short-lived. It will just really, really depend on what we see. Now, it may also may not end up providing, it might be very, very similar. So let's say the number that comes out is 3.9%. So it's the same again. We're going to end up with price sort of sitting sideways, I believe, for that hour of power that we might have available to us. And of course, if the numbers are fantastic and they manage to exceed 3.9%, then I would estimate looking at seeing action move up this way and testing this high over here and this high here to some point. So, there is a little bit of time to go. We're still a little while away. We do have some reasonable range to sort of work with at the current moment. So that's my general thoughts right this very second for the New Zealand dollar. Now, having a little bit of a think about what's going on and across the rest of the world, there's obviously been a couple of different markets that have sort of moved around today. We've had a pretty quiet day yesterday because of the Martin Luther King Jr. bank holiday for the US. So we didn't see too much action on US equities. In fact, I think most markets were closed. I know treasuries were certainly closed. There was no impact on them. So we did see a little bit of movement this morning. Now, I'm just going to put a couple of other charts just to sort of iterate as I'm talking through here. This would be, we'll put it on the S&P 500. So the S&P 500 has had, not a bad day. It hasn't hit a new high just yet, but it will likely try and test its current point now. And again, until this trend is over and there's evidence to suggest that it is done, then, my bias is going to remain long. However, that doesn't mean I'm necessarily thinking it's going to be long forever. I know right now there are a lot of questions about whether stocks and certain valuations are a bit over the top, but that is sort of yet to come. So during today's session, we did see some little gains. I think it was like a 0.2% rise on the S&P 500. I think on the NASDAQ, which should be this chart here, which when I can find my mouse again, there it is. This chart here, same sort of thing. You can see that just little light, the current candle. This is a daily chart, so it has had a bit of an improvement. But when you look at it in the scheme of how big this rally is, it's not a very big move, is it? So bearing that in mind, what else has sort of moved around? We saw most Asian equities sort of rising with it. European shares have also ended up on the high side. So if we were to have a look at some of the other ones, I know that the Hong Kong shares were outperforming. They're outstanding. You can see this move just here. It's incredible to sort of have a look at. They've had that quick bounce going off. So, there's plenty of opportunity still available for us in the market, even on those quiet days, to consider. So what are we really anticipating in the next sort of 24 to 48 hours between now and, say, the next Thursday session that we're going to be having that are likely going to be important? The first one is what I was talking about on Janet Yellen. Now, Janet Yellen used to be the federal chair of the Federal Reserve Bank of America a couple of years ago. The current chair that's acting now, Jerome Powell, took over from her place. So she's now being moved into a position via Joe Biden as the Treasury Secretary. So as opposed to being on the monetary stimulus side of things, she's now going to be on the fiscal stimulus side of things. Instead of it being Federal Reserve, she's now physical government. So there is a bit of a difference there. But what we're anticipating sort of hearing is that we're likely going to be hearing about her touching on currency policy. And it will probably also serve as a little bit of a forum for, lawmakers to sort of vet a few of the $1.9 trillion COVID-19 relief plan outlaid by the new president when he comes in tomorrow. And effectively, we're likely going to hear Yellen be a little bit defensive, and she'll probably be talking about, the need to act pretty big at this point in time to ensure that the economy doesn't falter in any way, shape, or form. And that will also to sort of iterate that borrowing costs are quite low, and being probably a little bit prepared for her to say that now, because we've got low borrowing costs, we should be providing great deals of stimulus because it's going to be cheap money for us to reaccess later. The concern that comes with that for a lot of people is, does this mean that taxes will rise? Potentially, is the answer I have for that. Potentially. I think that is likely probably a greater outcome than many of us are actually expecting. But, we will have to sort of wait and see on that front. We've seen gold and oil sitting very similar. Gold is about $1,836 per ounce, I believe, at the moment. And we've also seen oil fluctuating in around that $52 per barrel mark. So, they're sort of being a little bit stabler, as I would estimate. Beyond that, I think there's going to be a fair bit of a discussion, particularly from media, on what's coming from earnings results. We're going to see a lot on Joe Biden's inauguration tomorrow. It'll be I think it'll likely be tomorrow night, not during the day, depending on where you're located. If you're here in Australia, where I am, then it's likely going to be tomorrow night that we see a lot of action sort of happening on that front. We're also likely going to be seeing a fair bit about policy decisions on Thursday. We've got, central banks of Brazil, Malaysia, Canada, the Bank of Japan, and the ECB all delivering remarks on their monetary policy decisions. So there's a bit to consider when we look at all of those. If you are going to be trading the euro, obviously the big important factor is going to be what's happening at the Reserve Bank, or the European Central Bank, I should say. So, there is plenty of information for us to really be digesting at the moment. Now, some of the trades that I've placed in the last sort of couple of days really has been, late Monday, was really thinking about what might have happened on the NAS 100 and the S&P 500 before the markets reopened this morning for the US scenario, and today, and so far it's paid off. Effectively, I'm just going to drop us down on a time frame. I was in and around this area here and looking for a long move up to try and test firstly this high, and should I break this, I will hold on and look for the next run up as well. Now, you would probably say that this is downtrend action happening here, but you've still got a overarching long-term uptrend. So effectively, how I've positioned this sort of trade is by going with the line of best fit from about here to here to say, okay, well, that's roughly where my trend line is. And for those of you who might not attend these webinars regularly or may not have seen how I do it, I don't think of a trend line as a static piece of price. I quite often think of it as a bit of a range. So, if you have a little bit of a box like that, this is the bottom line, the upper side, anything in this area is somewhere where you might find support or resistance. In this instance, this is sort of an area of support as opposed to a line of support. And if I, see price dive into this area, then I will look for a long position to sort of keep me in the right direction going. Now, what's ended up happening on this is, on the 4-hour chart, we'll just sort of flick back. I've ended up in and around this sort of area here, and looking for price to sort of reach up above beyond this point. And ideally, I want to see, I still have belief that we're likely going to see, how many times have we seen a high broken and a all-time high for the NAS 100, the S&P 500, and a variety of those US-based indexes. Certainly in this one, I still feel that we're likely going to see a little bit more action out of it, regardless of the downtrend. So coming in here, we're quite close to our original support line. There's not a huge gap or leeway on it. Yes, of course, we've still got all this room underneath, but that's probably for another chart to sort of have a look at from there. And so far it's done quite well. So I am quite happy with that one in my thinkings and where I'm going. Realistically, the focus behind this is actually on the stimulus package that's coming next. We've heard from Joe Biden about this $1.9 trillion stimulus bill that he's planning to get through. He may not get the full 1.9, but certainly equity markets and those who would usually be borrowing money and getting a lot of handouts from a fiscal side of things are certainly feeling positive about it, because even if it doesn't go to their wallets directly, it ends up in them, right? Because consumers go and buy their products or whatever it may be. So all of those are certainly useful pieces to really consider. Equities are likely going to continue going up because we are going to see more stimulus and a big amount of it to come just yet. I do still have concern about when the Fed starts tapering, but that's still some time away. I think the moment we start to see the Fed tapering off their bond purchase programs and decide to actually put a little bit more effort into controlling inflation and keeping it lower, because it will likely run a little bit hotter than usual, as they said they wanted to, when they do want to actually try and bring it back down. they will have a very, very difficult task ahead. In fact, if you guys are wondering like how difficult a job the federal chair actually, job actually has, there's a little game that I found the other day that I think you guys might actually find quite useful. I'm just going to put it up here. Now, it's very crude. It's very simple. It's just here. It's a very basic thing. This is your web address up the top here, SFFED, education.org @ chair the Fed. Now, if you actually go into this and hit play now, it will take you to an area where you can pretend to be the Federal Reserve over 16 quarters. Now, of course, you can only raise and lower interest rates, but if you were to bring this all the way down and sort it out by, mimicking where we are at now at 0.25 or below %, and then trying to achieve sustainable employment at the same time, you'll see it does some pretty interesting stuff. So I didn't realize it made noise because it didn't before. Now, when it gets to sort of this point, you think it's okay. Eventually, you go too high and you'll just end up seeing your inflation running away whilst your employment situation is improving. And then once you get that inflation too high, it's next to impossible. So give this a go. If you just want to have a look at just maybe a bit of an experiment, it's certainly worth having a look at, particularly when we think about how much stimulus has gone on, how low interest rates are around the globe, and everything of that sort of nature. So outside of this, where might I be looking for my next positions? The other one I've been looking at is the Russell 2000. Now, I would like to show you guys a little bit of it's actually going to be coming up in one of the podcasts that we have at ACY Securities coming up soon. I spoke with Simon Ree, and Simon Ree is a best-selling author for The Tao of Trading, which is a pretty well-read book these days. It's not been out for all that long, but he's an options trader, and he deals with some more on the technical analysis side. So for those of you who might be technical analysts out there, it might not be a bad podcast for you to watch. I know most of the time my stuff is more on the fundamental scale, but this one I feel like has a little bit of everything in it for everyone. Now, it's not out yet, but it will be pretty soon. So when it does come out, anyone who is registered to these webinars will certainly get a notification. Now, when we look at some other markets, I'm just going to bring up the Russell, which is this one here, the US 2000, and this is the 2000, sort of smaller companies that are sort of on the top side. But I've got a similar position being held on this to what I do on the NAS 100, and that's a little bit to do with the exposure. It's also a little bit to do with this action that's going on here. Now, it's not, perfectly formed, certainly on a 1 hour, it doesn't. My entry point was at this point here, this candle there. So, this was earlier this morning at about maybe 8 o'clock, 9 o'clock in the morning that I decided to place this one on. And it's also sort of started paying out. I'm not sure how long this will continue to rally up for. I am hoping we can sort of get to this new high here, which is really not that far away. But there's still at least 100, sort of 20 sort of bucks to go before we get to that sort of price point. But nonetheless, the reasonings behind this is again based on what's going on with the stimulus side of things. So that's a very fundamental way of looking at it. But when it comes to looking at our other charts and our other ideologies, we might have a look at the euro dollar. From what we heard about what I've spoken to about Simon Ree, it's not a difficult thing. It is something that I have used before, in fact, many years ago, but it wasn't so much something for me at the time. I'm certainly considering putting it on my charts just as a general guideline. It is very, very simple when I can find the euro dollar in here somewhere, which is totally missing for me. I know there's a search function in MT4, but I seem to have lost the ability or forgotten how to actually do it, because when I first started with MT4, I never actually had that as an option. There's euro dollar just there. Now, let's just lay out what he was using the other day. Now, very simply, his strategy literally just uses EMAs, so exponential moving averages. There's a lot of other things that go into it. He looks at the deltas of options and generally ignores some of the macro evidence, but certainly keeps an eye on what goes on with the Fed and a number of other elements that are quite relevant. But It's something very simple that is easily transferable to, really any chart that you're looking at. You sort of start with some of your Fibonacci numbers as a moving average. So you use a 21, then you would use a 34, and then you'd go with a 55. Then from there you might move to, I think, an 89. I'm just doing these numbers off the top of my head. I can't remember the Fibonacci sequence exactly, but I can go back and certainly get the right ones. And then the idea here is, you would have these things. He also uses a 200 and a 100 as well, and then just keeps these on here. And so there's a couple of different ways to use this sort of action when you're doing it. We're just going to use a 200 just to keep it for ease of sake. And this is sort of more of a blacky color to me. Now, the way that we sort of look at how this sort of operates now, it doesn't really matter what chart. We might change it to something where we get a little bit more opportunity to look at things just on a smaller time frame. We might even go the 15-minute. Now, what he looks for is effectively this happening, where price comes back into these trend lines. Now, he's still using technical analysis, with looking at how prices are moving. He's still looking at what's happening in the fundamentals to a certain degree. And he's certainly looking at a variety of other numbers that sort of help him. But for very, very simple trading and, perhaps scalping methods, you could use it without those. And obviously trading in options, you do have a little bit of a different way of doing things, particularly with your money management. So, it's not a direct crossover. There would be some working out needing to be doing. But the very first thing that spreads to my mind is, if you're using longer term charts to identify the trend. So instead of thinking about these moving averages being something to be used in the trend as your general direction, you can actually use it a little bit differently. And in this instance, what we consider to be what is a mean reversion. And so in this instance, we're looking for where we know that these moving averages are an average of price over a certain period of time. Now, what we look for is the bounce back of price coming in. So you can see, I'm just going to follow, if you follow my cursor, we've got a bit of chop here. But once the moving averages start to fan out again around this point, we get these little bits where price moves back into them and then shoots away. Comes up, moves into it, shoots away. Up into it, shoots away. And every time you sort of have that happen, it starts pushing away a little bit. And eventually you will start, when you start seeing the lines bunch up again, so at about this point, at this area, they're kind of at their widest. Here, they're obviously at their narrowest. And then by the time you sort of get to here, you can see they're starting to bunch up again. So that when they start to bunch up again, you're sort of getting out. Obviously, you would also use your ability for checking support resistance and everything else in it to consider doing it. Something very simple you could also do to pick your direction that you're trading in would be this 200 moving average. If price is below, super simple. We are trading short. If price is above, we are trading long. The disadvantage of doing that is when you do get the change happening, you will miss out on the first little bit of it until your lines cross over on top. So that's why using trend line analysis and obviously being able to do candlestick reading and reading what's actually your price action as well is going to be valuable towards this sort of trading. So it might not be for everyone, but certainly there's plenty of scope in it. So anytime you do get this bounce back into price, then this trend, this moving average becomes in a way your stop loss. You're looking for your entry at sort of where price sort of comes back to. You would then enter in your line of best fit at the time, I suppose, would become your stop loss. In this case, it would be the magenta line for this position right here. And you would then hold on to that position all the way down as you can. Each time it comes back up in, you add to your position on the way down. So each time you're adding to it, you're pyramiding your position. So you're getting, a little bit more each time, purely because it's all going in the right direction. So, you would do that, and it gives you an opportunity to trail your stop down as this moving average moves down. Trail the stop down behind it. And if you found that price was starting to bunch up, move one trend line down, and then move one moving average down, and then all of a sudden you've got a place for your stop, and you'd probably end up getting taken out of this one. Or even if you decide to go real tight on the stops, move into the next one. So it is a way of sort of doing it. And you can watch there's a couple of different opportunities. I've just got to take this automatic flicking thing off, which is dreadfully annoying. There we go. Now, if we get to, sort of here's another sort of area, and this is the hard part. You need to identify the phase of the market. If you're in areas like this, you're not going to have a good time. And that's just as simple as that. Or even areas like this where it's just chop. So when you're in this sort of area, you need to be able to identify that, okay, this is probably not the right area to be using this type of strategy. This is better in a trending market. So if you were to, I'm just going to save this as a bit of a template. What do we call it? Reversion. And we'll put it on the US 2000. We'll put it on a daily chart, template it out. Where is it? There it is. And so, if you were in this run that we've seen for the last sort of year, I'm just waiting for my Zoom. Oh, I did it again. My Zoom thing just keeps popping back down and it covers all the buttons that I'm trying to look at over here. Now, if, we were looking at what's happened last year, you would have probably missed out on the big fall. You could have theoretically taken a position if you were just looking for crossovers as well and adding that to your list in the plan. But certainly, on the way back up, when we do have the crossover, we've not breached our last highs, but at this point here where we've got all of our things on the right side of prices come back down, bumped below our 200, and then you look for a long, and then again on this area where it's reverted back in and pushed into price, you'd take another entry and you would have been sitting pretty all the way to the top. And we could have done this on a number of different assets. Like, it wouldn't have made too much difference between any of them. And he's had a stellar year in 2020. He says it's one of his best years yet. And Simon Ree is actually, he's an ex-institutional banker, much like myself. So, we certainly have the experience behind us to sort of look at these sort of things. And his is super simple. It's easy to keep in check. And I quite honestly, I do actually like the idea of it. I don't like using indicators. I am someone who uses very, very simple naked charts and relies mostly on fundamental analysis. But if I can see opportunity in using something like this when perhaps you're not looking for charts. So definitely something to consider to add in part of your own trading. Of course, I'd recommend that you do it all on a demo account first and find if you can incorporate it in. If you can't, you can't. There's so many strategies, so many different ways of doing things. There's no right or wrong way. It's just about what, vibes with you a little bit, I suppose, and what you might like. Now, if anyone does have any questions, I'm happy to take some questions now. Otherwise, I will start wrapping up the night. We've gone through a couple of charts, marked up a few things, looked at the New Zealand dairy trade area. We've also had a little bit of a look at a new type of strategy, being a mean reversion sort of style. And we're also going to be, having plenty more webinars to come. So next Thursday, don't forget, we will have another one. So if you do have questions, please feel free to put them in now while I start to sort of wrap up and close things off. Otherwise, I will look forward to seeing you all next week anyway. Now, just before we do start closing things up, just to give you guys a bit of a reminder so that you can get on with your trading day tonight, we will have a quick look at this economic calendar. Now, right now, the next big thing to happen is going to be in about 20 minutes. We're going to be seeing this one happening here, the German Zoo report. Depending on my time zone, I'm not sure what time zone I've got there. This one says 6:21. So the next one we're going to be seeing is 8 p.m. Australian Eastern Standard Time just here. I know it says 7 p.m. there, but it's saying 6:21 p.m. on my calendar because it's obviously not accounting for daylight saving. So if you were to look at the next ones, the first one's going to be this current account and the trade balance side of things. You can already see we have our forecast and our previous. Just to remind you, previous is always on the far right. Your forecast is in the middle, and the actual result will be on the end when you look at this site here, which is forexfactory.com. We do have these also available on the ACY website. So, the current account situation is, they're expecting it to be an improvement. If it hits this number on the money, don't expect too much movement. I am also forecasting at the moment that, when it comes to what happens with this current account, a lot of it's likely already going to be priced in. Situation is still worsening. I'm more interested in looking at what's going on in the German economic sentiment, the Zoo economic sentiment report, just to see how people are feeling about the economy as well, because the way people feel about how they spend their money, and how they feel about the economy obviously changes how they want to spend the money. So they're all in sort of important things. And of course, tomorrow we will be seeing the GDT price index plus Biden's inauguration. So outside of that, the next little while is probably going to be a little bit quieter. The other big one to be looking at could be here on the pounds, because you've got CPI, PPI, HPI, and RPI all coming out at the same time. So that one's going to be a little bit tentative to have a look at, really. That could kind of go in a little bit of a different way. It depends on how all these figures sort of stack up against each other, but usually there's fairly low impacts from them. So keep in mind those. Now, otherwise, these ones are the big ones. Bank of Canada monetary policy. You're also going to be hearing about Australian unemployment, Bank of Japan. There's also going to be monetary policy statement out of the ECB. So, it is going to be a busy day on Thursday. So bear that in mind, that whilst it's, a little bit quiet in the middle of the week and we're looking for a bit of a rest, it will likely be fairly lively towards the end of the week. Having said that, we may even see some action happening around what goes on with Janet Yellen tomorrow and the inauguration of Joe Biden. So I am expecting to see a little bit of turbulence coming out of that. So bear all of that in mind. Now, moving on to finish off for the night. If you do have any of those questions, please feel free to shoot me an email. I am readily available to accept them. My email address down here is talktoal@acy.com. Of course, you can always hit me up on any of my other socials. Soon we will have some new slides to give you up on here, so you'll be able to get all access to them, but they are all available on our YouTube channel and all of those things as well. The next webinar will be at 7 p.m. on Thursday this week. So please feel free to join in. I look forward to seeing you all again there. And just have a generally good time and keep an eye on what's happening on your FinLogix trades. Don't forget to keep an eye on those economic calendars for anything unscheduled. And have a good day the next couple of days until I see you all again on Thursday. Bye for now.